Hi, this is Judge Herb Dodell. For the last number of weeks, we've been doing YouTubes on the subject of insurance. Insurance is very confusing and is very technical. It is basically a contract between you and an insurance company that they write, and they write it with terms that are obviously more favorable to them. Among the items in the policy is something called the duty to cooperate. That means that you must give them whatever they need to evaluate your claim. Sometimes that's even unreasonable. They're going to want copies of receipts of everything that you bought for which you're making a claim. If you have a piece of residential property, they're going to want to know what you paid for it, what additions did you make, what depreciation there is. They're going to go into great detail. Do you have to produce your tax returns? People always ask me that. The answer is no, unless you've provided those returns to somebody else, like a bank in connection with an application for a loan. Then it's considered a waiver and you do have to produce it. They get more complicated in commercial losses because often the policyholder is making a claim for loss of income, loss of profits, loss of inventory, things of that nature. And so they will go through intricate detail before they'll decide to pay your claim or not. And as I mentioned before, there is a process in California, and I suspect in most cases, in most states, that if there's a disagreement as to value, not as to causation, but as to value, you can use what's called the appraisal process. You pick an appraiser, they pick an appraiser, and together they pick an umpire. It takes 2 out of 3. I have a lot of information about that process in my book, which is From the Trench to the Bench, available on Amazon, where we talk about how it's done. And I have an article that I've written on the subject called Appraisal Process in California, which is attached as part of the appendix of the book, so you can see exactly how that process works. So the duty to cooperate, if you don't cooperate, they're going to tell you no coverage. And cooperation is a somewhat nebulous term. You think you're cooperating. If they don't think so, they can say you don't. You end up litigating that issue. If you win, you might even get what's called bad faith damages, which is what I'm going to talk about in the next YouTube, and get your claim paid with the potential of their even paying your attorney's fees. First piece of advice, not advice, guideline, is to get a public insurance adjuster. I've mentioned that in many of these YouTubes. They can help you make your life a whole lot easier and take a lot of the burden off of your shoulders.